So for weeks, a lot of folks watched MSTR stock dip. And yeah, a lot of people panicked and sold. But behind the scenes, a completely different story was playing out. Somebody, a very big somebody, was making a massive bet against the crowd. And in this explainer, we're going to follow that smart money.
So that's the big question, right? While the market was freaking out, who had the confidence, and let's be real, the capital, to be snapping up shares while everyone else was running for the hills? Let's get into it.
And look, this wasn't just some small nibble. We are talking about an additional block of nearly 500,000 shares. A move that big, it doesn't just scream confidence, it can actually change the entire ownership structure of a company. So who was it?
All right, it's time for the big reveal. The player behind this move isn't some speculative hedge fund trying to make a quick buck. No, this is a name that carries some serious weight on Wall Street, and their bet is measured in billions.
The buyer? It was State Street. Now, for anyone who follows institutional finance, that name should make your ears perk up. This is not a firm that makes wild speculative gambles. Their entire model is built around long-term stability, which is exactly what makes this huge, aggressive buy so fascinating.
To really get the gravity of this, you have to understand who State Street is. They're one of the largest custodians in the world, okay? They manage trillions of dollars in assets, and their whole game is about long-term stability, not short-term trading. So think about it like this. When a retail trader buys, that's excitement. But when State Street drops $1 billion bet, that signals deep, structural confidence in where this thing is headed.
This chart just lays out the scale of their commitment perfectly. With this latest shopping spree, their total position is now a massive 5,484,569 shares. They didn't just add a little bit here and there. They went all in while the market was gripped with fear.
So what's the total price tag on this bet? Well, when you add it all up, State Street's position in MSTR is now worth over $2.2 billion. Just let that sink in for a second. This isn't just a bullish trade. This was what you'd call a foundational bet on the company's entire long-term vision.
And that brings us to the million-dollar question, or in this case, the $2 billion question, why? Why would a conservative, long-term institution make such an aggressive move, especially during all this volatility? Well, it all comes down to two totally different ways of looking at the market. You know, this analogy just nails the institutional perspective perfectly. All these daily price swings, that's just a thunderstorm. The smart money isn't worried about getting a little wet. They're busy looking at the long-range forecast. And you can see the two mindsets right here side by side. On the one hand, you've got the retail mindset, which often reacts emotionally. It sees a dip and thinks, risk, panic, get out. But then you have the institutional mindset. It trades on fundamentals. And for them, that very same dip isn't a risk at all. It's a discount. It's a fire sale, a rare chance to load up on a core position at a great price. Okay, so we know who's buying, and we've got a good idea why. Now, let's get into the actionable stuff, the strategies. The first one is the aggressive play. This is for a scenario where the market gets this news and just goes straight up on a big green day.
We'll call this the whale follower strategy. Here's how it works. The trigger you're watching for is the price taking back the 188.50 level. But, and this is key, to avoid getting faked out, you need confirmation. That confirmation is a high volume breakout above 190. And I mean high volume. It's non-negotiable, because that's your proof that the big money is really behind the move. If that happens, the target is to ride that momentum up to the 198 zone, which is a big area of liquidity where sellers are likely waiting.
But what if the market doesn't just rocket up immediately? What if the bears try to pull one last shakeout? Well, that brings us to our second strategy, which is a more patient approach. This one anticipates something called a bear trap.
So what exactly is a bear trap? Think of it as a trapdoor. It's a move designed to fool sellers. The price gets pushed below a key support level, which triggers a bunch of stop losses and makes everyone think, oh no, here comes the big drop. But right at that moment of peak panic, the big buyers step in, the price snaps back aggressively, and it traps all the people who just sold or shorted at the absolute bottom.
So here's how you play it. The setup starts if sellers manage to push the price below yesterday's low. The whole point of this move is to flush out all the weak hands and sweep the price down to that 175 level. And that's where you have to be watching like a hawk for the signal. The signal is a fast price rejection right at 175. You'll see it as a long wick on the candle, which is basically proof that a wall of buyers just showed up and absorbed all the selling. If you get that bounce, the immediate target is a quick trip back to the 185 zone.
And this brings us to probably the most important number in this whole analysis, $175.
You can call it the golden zone. This is believed to be the institutional reload zone, the exact spot where the smart money is just waiting with open arms to buy even more.
Okay, I know that was a lot of information and a lot of numbers, so let's just boil it all down into one final cheat sheet that maps out all the critical price levels you need to watch for both risk and opportunity.
Think of this as your roadmap. On the upside, your first little hurdle is at 189.32, but the real battleground is that 198.40 liquidity zone. Now, on the downside, 179.992 is your first red flag. If that breaks, the bear trap is officially in play and all eyes shift to that institutional floor at 175. And the ultimate line in the sand? That's 166.01. If we break below that, the entire bullish idea needs a serious rethink.
So that leaves us with the final question. You've seen the smart money's playbook. You know the key levels. Is the next move going to be that aggressive, high-volume V-shaped recovery? Or are we about to see one last final bear trap designed to shake everyone out before the real move begins? The game is set.